My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends, just trying to make you some money. My job is not just to entertain, but to educate and put it in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. After a rough day that started strong before turning weak, Dow ultimately losing 250 points, S&P sinking 0.69%, and NASDAQ declining 0.64%. Sell. You know what everybody's talking about? They're talking about stagflation. Yep, stagflation. You hear it everywhere. And the drumbeat went into overdrive this weekend. It's the drum line, like it's all the 70s again. Stagflation. It's a combination of inflation with a stagnant economy. Sounds pretty bad, doesn't it? Woo! Baby boomers like me fear the 70s the same way our parents feared the Great Depression. That's why stagflation is, well, it's just as ominous as it gets. Call me a cockeyed optimist, but I don't buy the stagflation thesis. Now, don't get me wrong. We've been living with inflation for a bit now. I know that. I'm not making that up. I'm not going to try to sweep it under the rug. We just got a very negative read from an authoritative source, Kraft Heinz. In a depressing interview with BBC, the CEO of Kraft Heinz, Miguel Patricio, explained that he's raising prices all over the world. Why? Because of the inputs he has. Corn, sugar, palm oil, soybeans, coffee. They've all been rising in costs. So the whole industry needs to pass these price increases on to you. Or as the headline says, people must get used to higher food prices. Well, that's bad. Okay, what about the stagnation side of the equation? That didn't seem to be a problem until Friday when we got that very weak jobs number. The stagflation story seems so obvious at this point that we got two separate, not one, but two separate strategy pieces about how to handle it this weekend. One from Barclays and one from Goldman Sachs. The Goldman piece is particularly sobering. They point out that historically, stagflation is bad news for everything but healthcare and energy stocks. Oh, those are groups. That's a pretty flimsy read to hang your hat on here. Plus, it doesn't help that oil prices keep marching relentlessly higher. Another reminder of the 70s. The White House wants the oil companies to get busy producing, but they're making too much money by being disciplined and letting prices run. It's not like the White House, Biden can't call Pioneer and say, hey, listen, Mr. Sheffield, I want you to put more oil into the gas tank. I mean, come on. Put it all together and you got an inflationary nightmare that just has to end badly, right? Not so fast. In my experience, when everyone thinks that something's going wrong, something's going bad, you have to be careful not to buy into the groupthink. Right now, I don't notice a soul who believes we can get out of this moment without much, much, much lower stock prices. Not low, much lower. So permit me to take the other side of the trade. See, there is a big, big difference between now and the stagflation in the 70s. I'm talking about the pandemic. Remember COVID? We want to pretend it's over, but we haven't really transitioned out of the COVID economy in this country at all. The United States is way behind Europe when it comes to immunization, and we still got plenty of organized groups pushing the right to stay unvaccinated. What a hill to die on. But crucially, many of our current problems are indeed COVID-related. Because we aren't yet through the pandemic, we still have tons of absentee workers. There just aren't enough people to get the job done, not because we don't have anyone hiring. That's the stag part of stagflation. But because people are scared to death of getting sick. They don't want to get long COVID instead of short flu COVID, or worse, die. I think there's a huge disconnect between how Wall Street sees the pandemic and how the rest of the country sees it. When 700,000 people die before their time, when we're getting contrary messages from the nation's healthcare apparatus constantly, millions of people just want to crawl under a rock and hide. They don't want to work. The government misjudged the Delta variant at first, letting it explode all over the country. Then it did a complete 180 and went all in on scaring the heck out of us, so that a lot of people said, I'm not driving that school bus. I'm not going back to that counter. In response, older people with flush 401ks are leaving the workforce because why would you take the risk that if you don't have to work? Younger people feel less pressure to find jobs because there's a moratorium on student loan repayments. But businesses are desperate to hire people. They've got a voracious demand for labor. That's nothing like the stagflation of the 70s. I'd argue that our current bout of stagnation will be short-lasting. Once we get COVID under control, like they've done in Europe, it's not that hard, they've done it, We should be fine. Sooner or later, that will happen, but it has not happened yet, so let's stop pretending. How about the inflation side of the equation? All right, this one's tougher. Heinz is right. We're all going to have to pay more for pretty much everything until the harvests are bigger, we get the supply chain nightmare worked out, and more chemical plants come back online than went offline because of Hurricane Ida. I know people complain that there are no rollbacks in pricing. But you know what? That's not true. In the past, the biggest retailers, the ones with scale like Walmart and Costco, can come in underneath their competitors, especially the brand guys, once the raw costs come down. And believe me, the raw costs will eventually come down, and you'll be switching to their product. It won't come back to where it was, but it doesn't have to. We can get used to paying more for some things. What matters is that eventually all this noise about supply chains will indeed go away. The trucking companies will realize they need to pay truckers more. Hey, listen, it's a trucking job. That's a big job. Pay them more. The longshoreman will indeed have to work 24/7, even though they said that he can't work 24/7 because it doesn't help anything. That's wrong once we've got more truckers. Now let's go back to the stock market because that's what matters for this show. The last time we had real stagflation, we didn't have automatic investments in stocks like we do now. I just contributed money to a stock mutual fund for my retirement account. I did it today. They told me I had to do it. It's automated. Creates a very different environment when it's automated. Sure, the professionals analyze everything through the binary prism of buying and selling. But the home gamers, especially the younger ones, they're not thinking, ooh, wow, stagflation, better head for the hills. Instead, they're like looking it up and Googling it. Instead, in this environment, they're thinking, it's easy to get a job. Interest rates are low. I can buy a house. I got the money. Okay, cars are harder to find, but only because they're not making a lot of them, not because I can't afford one. Why is it harder? Again, it's the chip shortage. Like with so many other products, I think the chip shortage will ultimately be conquered by this incredible thing we call capitalism. Someone will put up factories in conjunction with the automakers and solve the problem. It's just going to take time, possibly a long time. More on that later. In the end, time is what this moment's all about. We need time to beat COVID, time to plant more acres, time to get more chemical plants online, time to build semiconductor foundries, time for people to realize that they're running out of money and need to go back to work. While we wait, it'll be very easy for money managers to turn bearish. But the people whose money they run, they do not share that pessimism. They know that investing in stocks has been sensational. So while we wait for the world to go back to normal, don't let the stagflationistas scare you away from the stock market. Oh, they love to invoke the specter of the 70s to scare people away from stocks, but I think that's bogus. They can get the stock market lower, but that's an opportunity. We don't really have a stagnant economy. And to the extent it's slowing, I'm betting that will be pretty temporary. As for inflation, it's real. But we just need to buckle up and stop trading off every little tick of oil or every dime of ketchup. Maybe you have to drive a little out of your way to get to a Costco. Maybe you have to return to the workforce and mass transit once we beat COVID. It's not the end of the world, people. Bottom line, I say give it time and do not panic. It might surprise you how quickly things get better right when most money managers think that all is lost.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.